In this presentation, we will work a practice problem related to a hospital. The information is going to be on the left side. We're going to enter that information into the blue area on the right side. The blue area on the right side will include a general journal where we will journalize the journal entries. We will then post those entries to the trial balance worksheet in the blue column. The trial balance worksheet having 3 columns, that being the beginning trial balance, those adjustments where we will post the entries, and then the ending trial balance. Similar to an adjusting entry worksheet, this will give us a quick view of the activity that will happen and the relation to the accounts as that activity does happen. These will be in order in terms of assets being in green. The orange will be liabilities. The light blue will be the equity section, or in this case, the net assets section would be equivalent to the equity section if it were a for-profit type of organization, here being the net assets section. The dark blue then being equivalent to what would be the income statement accounts, those timing accounts, revenue and expense type accounts in a for-profit type of organization. Same kind of temporary accounts here, those that will be measuring things over time, then be closed out to the net asset account at the end of the time period in the closing process. We will be completing this with the closing journal entries as well. Now let's take a look at, first we're going to do some maintenance here. We got 2 sets of general journals. So we got 2 sets of general journals. We want to hide the second set that we will be using later. So we're going to hide these columns by putting our cursor on column J and then highlighting or selecting over to column N, letting go, right-clicking on them, and then hiding those cells. And that gives us our information that we're going to post to right next to our general journal. And that'll be right next to the information that we are going to be using to create the journal entries. Number 1 then says the patient service revenue on account is the $1,677,900. That's going to be number 1. We are in essence going to be recording the revenue on account kind of activity. So this would be similar to is in a for-profit type of organization if we were to basically invoice a client. The debit's going to be going to accounts receivable. The credit's going to be going to some type of revenue account. So we're going to say the accounts and notes receivable is what we have on the receivable side of things. And then the credit's going to be going to our revenue type of account for our hospital. That's going to be in the patient service revenue. Credit to patient service revenue, the amount then being equal to that $1,677,900. That's going to be the debit and that's going to be the credit. There is our journal entry. So we're going to post this out now to our worksheet. We're going to post the accounts and notes receivable first. We'll be up top in cell Q4. So within Q4, we're going to say equals, scroll over to that $1,677,900 and enter. And then we're going to go to the patient services. That'll be down below, patient services. That's in cell Q15. Within Q15, we're going to say equals, scroll back over, and pick up that credit side of things and enter. There's our transaction, and that increases the accounts receivable, increases in the credit direction, the revenue account. If we scroll down, then the green zeros will indicate that we are in balance, the debits minus the credits, meaning that they're equal to each other and therefore in balance. This is going to be the change account, the change in the temporary accounts, kind of like net income type of account here that is going up in the credit direction given this patient service revenue. Okay, let's then go to number 2. I'm going to now start highlighting these as we go. So number 2, I'm going to make that green. The green ones are going to be the ones that we are currently working on. So these are going to be sales in the hospital shop. So we're going to say that there's a shop in the hospital where we sell stuff. And these are going to be the stuff that we sell in the hospital shop. So we're going to say here that we're going to make these sales for cash, we're assuming. So cash is going up. And cash does the same thing it would in a hospital as it does for basically any type of organization. It goes up and down, and it's pretty easy to know when that happened. It's going to go up with a debit here. Then the other side is going to go to some type of revenue. It's going to be revenue. I'm going to put it into revenue other. It's obviously not the primary revenue account of the hospital typically. And then we're going to be picking up the amount being equal to that $295,800. That's going to be the debit. That's going to be the credit. Now we'll post this out. So here's going to be our cash up top. We're going to post that to the cash up in our trial balance in cell Q3. Within Q3, we'll say equals, Scroll back over and we're going to pick up that 295,800 and enter. And there we have that increasing over here. Then we're going to go to the revenue other. So the other side is going to be down here in the revenue account. So we're in revenue other. We're going to be in cell Q16. Within Q16, we will say equals. Scroll back over and pick up the revenue of that 295,800 and enter. And there we have that. Once again, let's check if we're in balance given by the green zeros. Looks like we are. We see that there's an increase to the temporary accounts, the equivalent to what would be the net income account. Okay, now we're going to go to number 3. Number 3 is a little bit longer, it looks like. So I'm going to unhide. We're going to ungreen this one. And then we'll make this one green, indicating that the one that's green, number 3, is the one we're working on. Number 3 says, information gotten subsequently to recording patient service revenue and that relates to the current year. We've got the contractual adjustments, the provision for bad debts, and the charity care. So we're going to say that this is going to be number 3. So number 3, we will then have contractual adjustments. Now we could think about these in 3 separate journal entries, or we're going to combine them here. So we'll combine them here and then we'll kind of consider them in 3 separate journal entries. The contract adjustments are going to be contracts that we're going to say are adjusted, and therefore we're going to have to decrease the accounts receivable for those adjustments. The other side then is going to go to an expense account called contractual adjustments. You can think of this similar to a bad debt type of situation, which is why we're kind of grouping them together with the bad debt type of situation. These are all 3 types of items that are kind of like the revenue account is going down. So we're saying, hey, revenue that we earned, we're not really going to earn because we have this adjustment now. So we're going to think about it's going to need to go down in some way, but we're not always going to directly decrease the revenue account, which is the patient service revenue, but instead record an expense in some ways like we would for bad debt expense, this one being to contract adjustments. Then the second item is going to be related to the provision for bad debts, which will be same for a for-profit type of organization, where we will be recording the allowance for doubtful accounts and then the provision for bad debts down below. So that's going to be the transaction there, very similar to a for-profit type of organization. Charity care is where we're going to say some of the revenue that we had, some of this revenue that we recorded in the patient care will be charity care. Therefore, we will not be receiving money on it. So we will be reversing the revenue and reversing the receivable related to it, given the fact that it's charity and we will not be collecting on it. All right, so we're going to record those. We're going to do this with one transaction. So we're going to first think about the contract adjustments. So we're going to look for the contract adjustments. We're looking for the expense account. So we're going to scroll down. We're going to pick up the contract adjustments and enter. That's going to be for, we're going to say the 645,000 and enter. And then now we're going to pick up the expense accounts first. The other side of this is going to be accounts receivable. We will record that later. We're going to pick up the provision for bad debts now, the expense side of it. So the provision for bad debts is going to be right here, kind of like bad debt expense for a for-profit organization. The amount then being that 32.7. And then the other being charity care. So charity care is actually, we're just not going to make, in this case, an expense account. We're just going to decrease directly the revenue account. So now we're going to actually make revenue go down. Revenue is a credit balance account. We're going to make it go down by doing a debit to it. Okay, so now we're going to record the other side of this. The other side of this, these two, this one and this one, are going to be decreasing accounts receivable. So we're going to say accounts receivable will be equal to, pick up the accounts receivable up top, and then the two numbers are going to be negative of this number minus this number. Those are our two items in the accounts receivable. Then this amount is not going to go to the accounts receivable, decreasing it, but instead increasing the contra account, the allowance for doubtful accounts. So this one is going to be equal to picking up the allowance for uncollectible accounts. And I could say either a credit of the 32.7, or we can use our negative sum formula, which we'll do here. So negative SUM, and then we'll pick up all of these, and there we have it. So there's our credit. So here's our debit, there's the credit. Now we'll record this out. And again, you could think of this as different journal entries. If you thought of this as 3 separate journal entries, you would have the contractual adjustments would be a debit to the contractual adjustments account and a credit to accounts receivable. Then you'd have the provision for bad debts, which would be a debit to the provision for bad debts, a credit to accounts receivable. Then you would have the charity care, which would be a debit to patient service revenue, decreasing the revenue, and a credit to accounts payable. And I'm sorry, that second one, provision for bad debts, would be a debit to provision for bad debts, credit to allowance for uncollectible accounts. Okay, let's go ahead and post this. We got first the contract adjustments. That's going to be down here. So contract adjustments is going to be in cell Q19. Within Q19, we're going to say equals. Scroll back over to those contract adjustments and enter. So we've increased that amount. Then we want the provision for bad debts. The provision for bad debts is going to be down in cell Q20. So within Q20, we will say equals. Scroll back up to that 32,700 and enter. Then we got the patient service revenue. Patient service revenue, that's going to be in cell Q15. Something's in it. So we're going to say F2 plus F2. Scroll over to the patient service revenue and enter. And then we've got the accounts receivable, accounts and notes receivable. So we'll scroll back up top to the accounts and notes receivable. We are in cell Q4. Within Q4, we're going to say F2 plus F2. Scroll back down, picking up the 9075 and enter. Next, we have the allowance for uncollectible accounts. Allowance for uncollectible accounts, that's going to be in cell Q5. Within Q5, we're going to say equals. Pick up the allowance for uncollectible accounts and enter. So it's going to go up in the credit direction, bringing the net value of the receivables down, the 900,004 minus the 52.7. Then if we scroll back down to the bottom, we see that we are back in balance given by the green zeros. All right, so let's see what we have next. We now have completed number 3. So I'm going to ungreen number 3. And then we'll make number 4 green. So number 4 is the current one we will be working on and therefore green. And it says we have a federal reimbursement research grant for the $375,000. And expenses related to the grant paid during the year are $355,000. Okay, so there's going to be 2 transactions that are going to happen here. We have a federal reimbursement grant. So that means that it's a reimbursement grant, meaning we must have spent the money that the grant will then reimburse us on. So the amount that we paid related to the grant for the time period is the $355,000. So once we have incurred the expense, then we can basically request the grant for reimbursement of the expense we have, in this case, the $355,000. So we're first going to record the expense itself, the research expense, and then we'll record the grant. So the research expense is going to be a debit to research expense. So we're going to debit research expense, and credit, we're going to say we paid it with cash. So we're going to credit cash. The amount is going to be equal to that $375,000. That'll be the debit and the credit. Let's post that out. So we got the research expense first. Research expense is going to be in cell Q21. So within Q21, we're going to say equals, scroll over to that $375,000 and enter. So there we have that. The second account being cash. So cash, we're going to scroll back up top to get to the cash account. That's going to be in cell Q3. So within Q3, we're going to go into it. I'm going to do that by saying F2 plus F2, then scroll down, and we'll pick up the credit to cash of the $375,000 and enter. So there we have that. If we scroll back down, we are back in balance. So that looks good. Now we're going to do the second half of it. And the second half of it is going to say that we have been reimbursed for it with the amount that's going to be related to the grant. So we're going to get reimbursed. And actually, I picked up the wrong amount here. It should be equal to the $355,000. So pardon me on that. Well, it's not the $375,000. That's for the full grant. It's going to be the $355,000. Already been posted. The transactions or the linked cells are the same. So now we have the $355,000. Then we're going to say 4B is going to be the amount that we're going to get from the grant. Now, we're not going to get the $375 because it's a reimbursement grant. We're only going to get the amount up to what we have spent for the research, which is the $355. So we're going to say this will be equal to, we're going to say cash that we're going to receive for the grant, and then the credit is going to be going to revenues for grants and contributions. And the amount is going to be that $355, and the credit will be $355. So it's going to look like this. Let's go ahead and post this out. We're going to scroll back up top to the cash up top. So we are going to be in cell Q3. Within Q3, I'm going to say F2 plus F2. Scroll back over, scroll back down. We're going to pick up that $355,000 and enter. Then the next item we need is going to be the research grant and contributions. Research grant and contributions is going to be here. Here's the account. Here's the cell. We are in Q17. Within Q17, we're going to say equals, scroll over to that $355,000 and enter. So there we have that. That should put us back in balance. Now let's see what we have next. We're going to go back to the left here. We're going to scroll back up and we're going to ungreen number 4. We're going to make that ungreen. So we'll right click on it and make that no fill for ungreen. And then we're going to go to number 5 and we're going to make number 5 green. That's going to be the current one that we are working on. We're going to put a number 5 here. That's the one we're on. We say vouchers issued for, and then these are going to be the items we have the vouchers that are going to be issued for. We have the fiscal and administrative service expenses, the general service expenses, the nursing service expenses, other professional service expenses, inventory, and then we have the expenses accrued at the end of the year. So in essence, we're going to be recording all these items that we in essence purchased on account in one transaction. So let's go through these items. We're going to get the fiscal and administrative service expenses. So we're going to say equals. We're going to scroll back over. That's going to be an expense account. We're looking for the fiscal and administrative services. There it is. That's going to be on the debit side for that $201,840. Then we're looking for the general services expense. So that's going to be underneath equals. Scrolling to the right, we're looking for the general service expenses. Here it is, and enter. That's going to be equal to the $254,200. Next, we have the nursing service expenses. So that's going to be underneath. We're going to say that's going to be equal to the nursing service expenses and enter. That'll be equal to the $600,000 and enter. Next, we have the other professional service expenses. So next item equals the other professional service expenses and enter. That's going to be equal to the amount of the $187,500 and enter. Then we have the inventory. So inventory, next account is going to be equal to, we'll scroll up to the inventory. So inventory and enter. That's going to be equal to the $807,300. And so that's going to be the inventory. And then we have the accrued expenses payable. So the accrued expenses payable is going to be $8,700. Now that would be kind of an adjusting entry. Let's see if there's anything in it at this point. Right now we have accrued expenses payable of $12,000. So we're going to take that $12,000 amount. So we'll take that $12,000 minus that $8,700. That's going to give us an adjustment of the $3,300. So let's pick that up. We're going to scroll back down and we're going to go to, where's my cursor? We're going to be here and say that this is going to be equal to the accrued expenses payable. That's going to be for $3,300. And then the credit of all this is going to go to vouchers payable. So here's going to be the vouchers payable. That's going to be similar to accounts payable for a for-profit type of organization. We're going to be having purchased all of these kind of like on account rather than for cash. So this will be equal to vouchers payable. We're going to be on the credit side. So we are in H23 where we're going to have our negative sum, our plug formula, negative sum, the trusty negative sum formula of all of these and enter. So there's going to be our credit. Let's go ahead and post this out. So we're going to start off with the fiscal and administrative expenses. So fiscal and administrative expenses is in cell O22. We're going to post it to Q22. Within Q22, we're going to say equals, scroll over to that 201,840, and there we have that item. Next is the general service expense. So general service expense, next one, we are in cell Q23, where we will say equals, scroll over and pick up that 254,200. There we have that. Next one is going to be the nursing service expense. So we're going to scroll over to the nursing service. That's in Q24, equals, and we're going to scroll over and pick up that 600,000. Enter. Next, we have the other professional service expenses. That's going to be in Q25, where we will say equals, scroll over to the other professional services and enter. And then we have the inventory. So that's going to be an asset type of account. So we'll scroll back up and pick up the asset type of account. And that's going to be in Q6, where we will say equals, scroll back down to the inventory. And that's going to be the 108,300. And then we have the accrued expenses payable. Accrued expenses payable. That's going to be a liability account. Here we have it. We are in Q13, where we say equals, scrolling back down for that 3,300 and enter. That brings that balance to 8,700, which is, scrolling to the left, what we decided it should be. So it did do what we would expect. It took that amount to 8,700. Then we have the vouchers payable. That's going to be like the accounts payable type of account. Scrolling back up, we have vouchers payable in cell Q12, where we will say equals, scroll back over, and pick up the credit of the 1,355,140 and enter. So there we have that. That'll put us back in balance. Here's the change to the activity to the temporary accounts. All right, so now let's go back over and we're going to see what happens. We're going to go and ungreen number 5. And we will then regreen or green up number 6. So number 6 will... Now we're out of room for this first set of general journals. And so this is a good stopping point. We're going to stop here. We'll continue on with number 6 next time. We will do so by unhiding these cells and then continue on posting to the general journal.